See this number? This isn't just a number on a screen. This is my soul, quantified. This is my net worth after 1 year of building equity in a house. You know, the American dream? Yeah. Well, this is what happens when the dream turns into a financial nightmare. This is what's left after sinking my entire life savings into a pile of bricks and wood.
So I decided to find out for good. I spent the last 365 days and over $100,000 of my own cold, hard cash in a high-stakes experiment to answer that one simple question. The result? Well, it nearly bankrupted me and, not to be dramatic, almost destroyed a friendship. So how did I manage to light a six-figure pile of my money on fire in just 12 months? Let's get into the bet.
Here was the setup. It was a financial duel to the death. Me on Team Buy versus my friend Dave on Team Rent. We both start with a clean 100 grand. My mission was to buy a house and start building that magical thing everyone talks about. Equity. Dave's mission? Keep renting his apartment and invest every single dollar that I was forced to spend on my house. 1 year, 2 paths. Which one leads to wealth and which one leads to, well, that big red number you just saw?
My journey into homeownership wasn't just stressful. It was a complete and utter circus. I'm talking about bidding wars that felt like a back alley poker game where everyone is bluffing and the house always wins. I signed a mountain of paperwork so tall it needed its own zip code. And the closing costs? Oh, that's just a fancy term for a surprise financial uppercut you never see coming. It felt less like buying a home and more like being hazed into a very, very expensive cult.
And as I sat there, pen in hand, signing away the next 30 years of my life, my hand was literally shaking. I wasn't thinking about paint colors or what kind of lawnmower to get. Nope, my brain had one thing on a loop. The last time the entire world bet big on housing and lost everything. I was thinking about 2008.
To really understand my terror, you have to understand the ghosts of 2008. And the first ghost, the main villain of this story, was the subprime mortgage. These weren't just loans, okay? These were financial time bombs, handed out like candy on Halloween to people who had absolutely no chance of ever paying them back. This was the weapon of mass financial destruction that lit the fuse for the whole crisis.
Just how bad did it get? The source material here is just mind-blowing. By 2006, 1/3 of all mortgages were subprime or had no documentation. They literally created something called a ninja loan. I am not making this up. It stands for no income, no job, no assets. You could basically be a golden retriever in a trench coat, walk into a bank, and walk out with a $500,000 mortgage. It was absolute madness.
But why? Why would banks do something so obviously insane? Well, this quote from a Wall Street trader explains everything. The demand from Wall Street for these garbage loans was so ravenous, so completely out of control, that they literally ran out of people with bad credit to sell them to. They needed more fuel for the fire. And that's where our next villain enters the story. So, Wall Street took thousands of these ticking time bomb mortgages, threw them into a blender, and baked them into a brand new Frankenstein creation called a collateralized debt obligation, or a CDO. The easiest way to think about it is like a financial lasagna. Except every single layer, from the cheese to the sauce, was made of rotten, toxic meat. But they slapped a fancy Italian name on it and sold it to the entire world as a 5-star gourmet meal.
And then the lasagna went bad. In September of 2008, the system didn't just bend, it vaporized. And look how fast it happened. This wasn't a slow decline, it was a high-speed train wreck. September 7th, Fannie and Freddie get seized by the government. September 15th, Lehman Brothers, a 158-year-old bank, gone, bankrupt. September 16th, AIG, the world's biggest insurer, needs an $85 billion bailout to survive. It all happened in a matter of weeks.
Still don't think it was that serious? This is a direct quote from the head of the Federal Reserve, Ben Bernanke, begging Congress for a bailout. This is the financial equivalent of the pilot getting on the intercom and saying, folks, just a heads up, we might not actually have a plane in about 5 minutes. They were staring into the abyss. And that is what was playing in my head as I signed my mortgage. Fun, right?
So while I was having flashbacks to the financial apocalypse, what was my friend Dave on Team Rent doing? Oh, just living his best life. My weekends were suddenly a never-ending list of chores, fixing leaky faucets, mowing the lawn, painting things. His weekends? Brunch, investing in the S&P 500 from his couch, and, my personal favorite,
napping. He was literally making money in his sleep while I was becoming an unpaid handyman.
And the pain started almost immediately. 3 weeks after moving in, I heard a loud bang from the basement. The water heater had exploded. The bill? $8,750. That was not in the budget. My budget was basically, "Dear God, please don't let anything break for at least 1 year." God apparently was not listening. And this right here is the dirty little secret of homeownership that no one ever wants to talk about. You think your monthly payment is building equity, but in reality, most of your money is vanishing into a financial black hole of unrecoverable costs. Mortgage interest goes to the bank. Property taxes go to the government. Insurance goes to the insurance company. None of that is an investment. It's just the price of admission to the home ownership club. And that's before the soul-crushing repairs start.
So 6 months into my grand experiment, I was hemorrhaging money, I was stressed out, I was exhausted, and my bank account looked like a crime scene. I genuinely thought it could not possibly get any worse. And that is when the universe decided to say, hold my beer. My personal financial crisis, my own Lehman Brothers moment, was about to arrive. A minor foundation crack. That's what the inspector's report called it. Turns out, in the world of contracting, minor is just code for give us nearly $20,000 or your house is going to split in two. $19,500. This one repair didn't just set me back. It was a financial knockout blow.
And just to put my personal pain into perspective, look at this chart. During the real 2008 crisis, American households lost $11 trillion in wealth. My 20 grand felt like the end of my world, but it was just a tiny, microscopic drop in an ocean of financial devastation that swept across the entire country. So this was it. This was my moment of maximum despair. Covered in drywall dust, bank account completely empty, I just sat on the floor of my money pit and wondered if this whole American dream thing was the most elaborate, most expensive scam ever invented by mankind. But the experiment wasn't over. After a full year of financial bloodshed on my part, and leisurely brunches on Dave's part, it was time for the final reckoning. It was time to tally up the numbers and see just how badly I had lost this bet. Okay, let's break down the carnage line by painful line. We both start at 100 grand. I immediately lose $45,000 to the down payment and closing costs. Gone. Dave pays $24,000 in rent over the year, but then look at my side. I paid $18,000 in pure interest to the bank, another $7,500 in taxes and insurance, and that soul-crushing $28,000 in repairs. Sure, my house went up in value by 5 grand, but meanwhile, Dave invested all the money he wasn't spending and made over $9,000, doing absolutely nothing.
So my final net worth after 1 full year of building equity, if you take my home's value plus what little cash I had left and subtract my mortgage, I ended up with $71,549. I had lost over 28% of my starting capital in 1 year.
And Team Rent? My dear friend Dave? His final net worth, after paying rent and just parking the rest of his cash in an S&P 500 index fund, was $109,120. He didn't just beat me. He absolutely humiliated me. It wasn't even close.
So, yeah, I lost big time. I set out to prove the American dream was real, and all I got was this lousy $28,000 bill and a net worth that got taken out behind the woodshed. Look at my face. This is the face of pure, unadulterated financial regret.
Which brings us right back to the beginning. The big question. After all of this pain, after losing the bet, after effectively setting a pile of my own money on fire, is the American dream a scam? And here is my final answer, my big takeaway from this whole painful mess. After 1 year? Yes, it feels like a total scam. Renting was the undisputed slam dunk champion. But what about after 10 years? Or 30? What happens when my mortgage payments start chipping away at the principal, and Dave's rent keeps going up every single year? The truth is, the American dream isn't a scam. It's just not a get-rich-quick scheme. It's a marathon run through a minefield. It's a decades-long bet that you can survive the constant costs long enough for leverage and appreciation to finally work their magic. It's not a scam. It's just a much, much longer and more painful game than anyone is willing to admit. The real question is, can you afford the price of playing?